All right. Welcome, everybody. Early morning crypto talk. Bitcoin. Brandon here from Los Angeles, California. We have some interesting news in the crypto space today. Caught my attention, so we're gonna learn a couple of new things today. Make sure you hit the thumbs up in the YouTube, and also type in the chat box where you're listening in from. As a disclaimer, I'm not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestion, and it is up to you to make an informed, intelligent decision on which direction to move into. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make that happen? What vehicle of choice? Make a decision, take action, and remain focused. Do not get distracted. There's so many things out there that can distract you in this space. You have limited resources. Now, this is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. So let me get this prepared. Good morning, Muhammad. Latifa from Delaware. Share screen. All right. We should be good to go now. All right, first up that we look at is what's going on with the market. As we saw yesterday, the market had a steep decline, losing $400 for Bitcoin in a day. About $14 billion came out of the market. Right now it's at $123 billion, so it gained $1 billion within the last 24 hours, and Bitcoin dominance 52.3%, so a lot of that went to Bitcoin. The market looks pretty flat right now. Looks like it kind of hit its bottom for now. Bitcoin price 36.98. So we've got a flat rate right now. So if anyone wanted to buy back in, this is the time to do so. 24-hour best performer, we have Chainlink. Let's see, Ontology, IOST, any top coins. Got Verge there, Binance Coin, 4.35%. Basic Attention coming up, ranked number 34 now, 4.16%. Ethereum Classic is up a bit. Poloniex is back up, 2.96%. Tron, 2.41%. All right, so what about worst performers? Bugara Coin, ODM, Ion, any top coin. Bitcoin Cash, -2%. Bitcoin SD, -2%. Stellar, -2.28%. So pretty flat market right now. We'll see how things are going by the end of this. Good morning, Ms. Shane West, Latifa from Delaware, Gina Mohammed, Lorna Vasquez. And first up, 70% of central banks are working on digital currencies. No hurry to issue them. But the fact that 70% are working on it, those of you in the KGX community yesterday, we did a special broadcast from our communities only group where we talked about the world's wealth, where the money is around the world. 70% of the banks are working on digital currencies. They're getting prepared. Put this link in the chat box for you. Good morning, Tracy. A survey commissioned by the Bank of Central Banks, the Bank of International Settlements, has disclosed that even though central bank digital currencies are being researched by a big number of reserve banks, the work is mostly conceptual. Consequently, only a handful of them have any intentions of issuing a CBDC in the future. The survey finds that a wide variety of motivations is driving an increasing number of central banks to conduct conceptual research on CBDCs, central bank digital currencies. However, only a few central banks have firm intentions to issue within the next decade. Global Central Bank Survey shows that digital currencies in whatever form are unlikely to be issued widely at any time soon, but they are preparing for the future. Per the survey, which was conducted in 2018, about 70% of the central banks indicated that they are already engaged in CBDC work or will be in the near future. This was a slight increase from 2017 when the figure was around 65%. So 2 years ago, 65%, now it's up to 70%. Most of the central banks that are not engaged and won't be engaged in CBDC work hail from tinier jurisdictions or have more urgent priorities. So we're talking about the big banks here are the ones that's preparing. Among the central banks that are engaged in CBDC work, 31% are concentrating on general purpose central bank digital currencies issued for use by the general public, while 13% are focusing on wholesale central bank digital currencies issued for wholesale settlements, such as security settlements and interbank payments. On the other hand, around 56% are working on both wholesale and general purpose CBDCs. There are varied reasons why the reserve banks are pursuing both general purpose and wholesale CBDCs. Looking across all respondents for both types of CBDC, payment safety and domestic efficiency are the most important motivating factors to central banks. Least important are predictably financial inclusion for wholesale CBDCs and less predictably cross-border payments efficiency for general purpose CBDCs. Partnerships and collaborations. The survey, which polled 63 central banks, 22 in advanced economies, and 41 in emerging market economies, also revealed that central banks around the world are collaborating with each other with regards to proof of concept work, especially on security settlement and cross-border settlement. Example of these collaborations include Project Stella, which is being undertaken by the Bank of Japan and the European Central Bank. There is also a joint proof of concept project being undertaken by the Bank of Canada, the Bank of England, and the Monetary Authority of Singapore regarding the legal authority required to issue a CBDC. Nearly 25% of reserve banks indicated that they have already possessed or are about to get the authority, while 40% are unsure. The uncertainty is, however, falling relative to the survey that was conducted in 2017. All right, in layman's terms, what they're basically saying is right now, 70% of the world's central banks, not only are they researching crypto and blockchain, they have patents for it. They're already looking at how to institute their own coins for those banks. Follow the signs, follow the clues. The foundation is being set up and built right underneath our feet. And you guys are right here at the beginning. Next up, look at Morgan Stanley, another bank. Morgan Stanley, a stock market vulnerable. The sentiment is extremely bearish. Now, what did Jamie Dimon for Chase just say a couple of days ago? Oh, there's no recession. There's not going to be a recession. The stock market's rallying. It's a bull run. Didn't Jamie Dimon just say that? Remember what I said? Don't listen to anything they say. Follow what they do. In fact, do the opposite of what they say. And here you got Morgan Stanley that's saying the business is saying the complete opposite of what Jamie Dimon is saying. Stock market vulnerable. Earlier this week, Morgan Stanley strategist Mike Wilson said on CNBC Fast Money that the stock market is still vulnerable to a short-term drop. Although the stock market has shown extreme levels of bearish sentiment and an intense sell-off throughout December 2018, that may be a signal for the establishment of a bottom. Wilson said that fundamentals are still missing from the market. According to Wilson, the fundamentals of the market remain messy and Wall Street is concerned about the performance of the market. He said, valuation, we met our goal. We also met our goal in terms of sentiment and position. It's really bearish, extremely bearish. All the things, it's as bearish as we've seen. I mean, can he not make his point anymore? He says it's really bearish. It's extremely bearish. It's as bearish as we've seen. That is in complete opposite of what Jamie Dimon said. What we don't have yet is the fundamental picture is still messy. All the things we've been worried about, the market's been worried about all year, are now starting to come to the fore. Given the intensity of the sell-off of the U.S. stock market and several uncertainties, including the trade war with China, Wilson explained that similar to how the bear market was extended throughout the last 2 quarters of 2018, it may take a relatively long time to establish a bottom in the market. Several issues, such as the poor performance of Apple, the unwillingness of the Chinese authorities to compromise on certain areas like industrial policy, and many internal factors were outlined as reasons to avoid an all clear in the stock market. While Apple isn't a surprise that they missed, the magnitude of it was a surprise. While Skyworks isn't a surprise, that's not necessarily good news. Our view is that the rolling bear market that happened last year is going to be a rolling bottom. Not everything is going to bottom at the same time, but my guess is it's going to be the first in and first out, kind of like waves. The stuff that let us in will probably lead us out, Wilson added. What are the fundamentals? Strategists like Wilson are cautious in declaring a bottom in the U.S. stock market due to the declining earnings revision breadth, which refers to the number of firms in the S&P 500 revising future profits higher against firms making revisions based on declining profits. It's growth. Ultimately, it's earnings. Are we going to have accelerating earnings growth? When is earnings growth going to bottom? So the two things I'm most focused on right now is earnings, revision, breadth. That is the reason why we were negative last year. It has turned down sharply. It's 8% negative. As long as companies are lowering profit expectations and revising their earnings, the Morgan Stanley strategist suggested that it is too early to safely state that the stock market is all clear of any short-term and imminent danger. Well, Jamie Dimon just did. The Dow Jones has added 500 points since January 8th, but it has yet to recover to December levels at 24,500 to 25,000 points. So, I mean, you've got on one case, Jamie Dimon representing Chase Morgan that says, JP Morgan Chase that says, yeah, the bottom's done. We're not going to head for a recession. Stock market's going to bull. And then you've got an analyst from Morgan Stanley saying the direct opposite. Who do you believe? They're both rich, right? You got to follow your own education. You got to be able to see the signs on this. What do I think? And remember, I am not a licensed financial advisor. I don't have billions of dollars like Jamie Dimon, but I do have education, and I have been following the markets. What do I think? I think that we're headed towards a recession. Matter of if, not when. I think that we're about to go through the worst recession than 2008. In fact, it's going to turn into a depression. I believe that those that take advantage of building their crypto portfolios now will be able to save themselves from this. Especially if more, you know what? It's not even about building your crypto portfolio. It's more about the ability to have a source of revenue stream that's not traditional. I think that's the best type of term I can use for it. It's not traditional, meaning you're relying on your 9-to-5 job, or you're relying on your stock performances. If that's your main two sources, you're gonna have a lot of heartache and pain. If you have other non-traditional sources like crypto revenue, crypto investing, certain things in real estate, then you're gonna be all right. That's why I say I do not buy Bitcoin. I earn Bitcoin. Like that. Earn Bitcoin, don't buy it. All right, last article up. The differences between Forex and crypto, and I get this question asked a lot, all the time. The difference between crypto and Forex. So we're just going to read the article. Just for the record, KGX will be having a Forex trading desk and a crypto one. So Forex is far, far, far bigger than crypto. Forex is bigger than the stock market. Just so you know. The differences between Forex and crypto. Many would argue that comparing crypto trading with Forex is like comparing apples and oranges, but that's not entirely accurate. On closer inspection, there is a number of similarities between the two. That's why it's very easy for Forex traders to become crypto traders. They just got to make a couple of adjustments and strategy. It's not that it's more difficult for a crypto trader to become a Forex trader than the reverse. For example, the underlying market dynamics of supply and demand will usually govern the prices of the respective assets. Here, traders share their thoughts on the mechanics of each. It takes a certain type of savvy trader to navigate unpredictable market conditions and emerge in profit. Let's start with the pros and cons to be found with trading both crypto and Forex. Alex Mashinsky, CEO of Celsius Network, notes that crypto and Forex both represent a digital store of value that can be purchased and sold with ease. They both have high volatility, which creates an opportunity for quick profits, going long or short. The pro of trading crypto and Forex is that these are global markets dominated by large financial players who have algorithmic trading capabilities. Most individual players cannot compete or match the trading and speed of hedge funds and large banks which swim in these markets, said Mashinsky. He explained that the biggest difference between Forex and BTC markets is that, unlike Forex, Bitcoin started and scaled via global retail trade and not via institutional players. You guys see that difference? I'm going to read that one more time. The biggest difference between Forex and BTC markets, Bitcoin markets, is that unlike Forex, Bitcoin started and scaled via global retail trade and not via institutional players, because Bitcoin crypto, that's decentralized. This makes the Bitcoin market, BTC market, behave in a very different pattern than traditional Forex market. Kyle Cox, senior investment analyst at Invictus Capital, stresses that Bitcoin has an ultimately finite supply of 21 million coins with protocols that control new issuance, meaning there is little room for manipulation. Therefore, trading in Bitcoin would be purely focused on demand, which in turn would be based on adoption and in turn the quality of the project, Cox explained. Higher adoption of Bitcoin essentially increases the size of the network, which means more users, higher utility, and an increasing price. The lack of outside or centralized influence is unique and a benefit of the Genesis crypto asset. Okay, stop right there. In theory, that is true. 2017 December changed that when the CME and the CBOE came in and brought futures, the derivatives, which allowed players to enter the market without actually having to buy Bitcoin. Because of that changed this. So they are able to manipulate it. It wasn't designed for that. Bitcoin wasn't designed for the derivatives, the institutional players. But their introduction, their entrance into this space kind of has thrown off your ability to, what's the word I want to use, project. The real value of Bitcoin right now is over $14,000 per coin. If you took the futures out of it and allowed it to do what it was designed to do by supply and demand. When you look at Forex, though, and Forex is dealing with fiat currency trading with each other, is not limited in supply. It's not finite. That fiat currency can change tomorrow if one government decides, oh, we're just going to print up, 50 billion more fiat money out of thin air. That affects the market. That can't happen in Bitcoin. They say, oh, we're just going to create another 21 billion Bitcoin or 21 million Bitcoin. That's not going to happen. That's a huge difference. But again, the futures has kind of skewed this. But in theory, that's correct. That's how it's supposed to be. Okay. Fair amount of skill and luck is involved. I agree. Fiat currencies, on the other hand, have potentially unlimited supply. Didn't I just say that? As each currency supply is determined by the monetary policy of the specific issuing country, which means there can be negotiations between China and the United States, and that's going to affect the value of, basically the USD to the yen pair, which will have an effect on the euro, which will have an effect on all the other pairs based off of politics, not supply and demand. The Russia decides, you know what, we're going to dump all of U.S. treasuries and we're just going to now go to gold or crypto. A political decision, not based on supply and demand, that now is going to affect the entire Forex market. That's what they're meaning here. Which is why if you are dealing in Forex as well, if I was a Forex trader, I would still be doing the same thing I'm doing now as a crypto trader. I would be reading the news far more than I am on crypto. I would need to keep up on geopolitics like no other. Because what happens with another country has an adverse effect around the world on the Forex market. That's why it's Forex, foreign exchange. So each country's central bank typically regulates the supply of that currency available through various policy mechanisms linked to its repurchase or interest rate, which can essentially be defined as the opportunity cost of holding cash in that economy. These policy decisions are conducted with an acute awareness of domestic and global macroeconomic conditions and imperatives, and thus result in fluctuations of both supply and demand, said Cox. I'll give you an example. I started trading actually Forex, what was this, 2016? No, beginning 2017. I had $5,000, right? And like overnight, I lost half of it. 2,500. I was using a Forex trading bot. Now I was down to $2,500. Now, unlike crypto, the difference with the Forex is I lost that. See, the only way you lose in crypto is if you sell when it's low. In Forex, you lose when it drops. You just lose. It's not like I have my $5,000 values there anymore. It's not like I bought a house and the house dropped in value. I just hold on to the house until it comes back up in value. That's not how Forex works. And if you really want to make a dent in Forex, you need some serious money. You need at least 10,000 plus, because you can survive. Let's say you have a 20% loss off your $10,000 in Forex. You go down to $8,000. At least you still have $8,000 that you can make up that $2,000 difference fairly quickly. If you got 5,000 and you lose 50%, you're down to 2,500. It's going to take you a whole lot longer to double that money to get back to 5,000. It's going to take you a while. That's not the same way in crypto. Literally, in crypto, you can start with $5 and in less than a year, flip that to six figures in crypto trading. Anyways, let me continue here. It's not about my opinion. Let me read the news. So these policy decisions are conducted with an acute awareness of domestic and global macroeconomic conditions and imperatives, and thus result in fluctuations in both supply and demand, said Cox. Currency traders looking to profit will essentially look to buy currencies that show signs of macroeconomic improvement through the selling of currencies that show the opposite. There is a fair amount of skill, and I will say you do need a lot more skill to trade Forex than you do to trade crypto. I will say that. So there is a fair amount of skill, and it must be said, luck involved in this process, as any honest trader would attest to. That's correct. Luck. Like one night, I saved myself a couple $1,000 because I fell asleep. What do you mean, Brandon? Because you fell asleep. I fell asleep. And because I fell asleep, I wasn't awake to look at the chart and make a move that at the time looked to be correct. It would have been the correct move to make because others made that move. And then the market did a reversal like within 10 minutes. What I mean by that is I had my money in Tether and it looked like it was at the bottom and I would have bought back in, and then it dropped by like 30%. while I was sleeping. So if I was awake, I would have lost 30% value. It was luck. I went to sleep. I've also had the reverse happen. I lost out on gains because I went to sleep and wasn't looking at the market. This luck happens. Another factor is to consider the nature of the Bitcoin blockchain means that BTC is traded on a peer-to-peer basis, which in its raw form involves little cost. Cox pointed out that this is due to the fact there are no intermediaries in the classic sense, as is the case in the foreign exchange market, where brokers and aggregators facilitate transactions between participants, which can often add a layer of fees. The smart Forex guys aren't trading, off their own knowledge. They're using a system. Most of them that I know out there, they're either mirroring trades, they're a part of a group that they're getting alerts from, they're a part of different bots, automated. It's very difficult to sit there and look at the charts for Forex 24/7 to day trade that way. So where intermediaries come into Bitcoin and other cryptocurrencies is through cryptocurrency exchanges, explained Cox. These exchanges act as central repositories of assets, facilitating transactions and levying fees on the basis. So yes, this aspect can be seen as somewhat of a similarity to Forex. However, with different mechanics. In truth, it is difficult to make a generalized comparison of actual fees as they vary widely depending on exchanges, currency pairs, volume, and many other factors. Forex markets also have deep levels of liquidity. Another crucial fact to note is that Forex markets have deep and entrenched liquidity as a result of a long history of activity. Cox explained, the phenomenon of globalization and technology have boosted activity in the trading of foreign currencies as a result of ballooning cross-border transactions and wide availability of trading means and infrastructure. Forex is by far one of the largest marketplaces on the planet, with daily trading volume in the trillions of US dollars. Most of this volume is attributed to established, developed country currencies, such as the US dollar, which serves as a reserve currency for the world. For now, what happens to the Forex when that changes too? That's an interesting question. There are some similarities here with Bitcoin, which can be considered as the dominant reserve cryptocurrency and which most trading volume can be attributed to. That's true because right now, people that's trading on crypto, they're always using either Bitcoin pairing to something else or Tether and Bitcoin pairing to something else. Not too many average folks is using these other pairs. Like, yeah, I'm going to do Ethereum and start trading off with these. Well, might as well look at this. If you use Ethereum to pairing, look, Zcash is up 5%, Ethereum Classic 2, Augur 8. You can make some money here. The only problem is there's no volume. A trade could take freaking forever if you're not watching it right way. But setting it and going, yeah, this might work, these type of pairs. Or people that want to trade off a Ripple to Zcash, Dash, Litecoin, NXT, MAID, Bytecoin. But most it's USDT. Look at the volume. See that volume jump? But USDT as compared also with Bitcoin, volume is higher than all the rest, especially than Ethereum. So go back. Same in the Forex market. They're using everything paired up to the USD. A drop in the ocean, some might say. Bitcoin's volatility is also considered to be far higher relative to that of the most dominant currency pairs in terms of volume. Cox explained that trading in emerging market currency pairs, which can show elevated periods of volatility, will be a far better comparison to trading in Bitcoin. That's true. Only a small percentage of traders extract profit. Oh, now this is interesting here. Pay attention to this, because I had a conversation with someone else, not in KGF community, that was following Da Vinci, and Da Vinci has a strategy on trading that is designed to build your crypto portfolio. Saying, yeah, never put more than 5%. You don't want to do 1 to 3%, but no more than 5% of your assets into the market to trade with, and you use that money and you build. He's not really taking out much profits, maybe a small percentage, very small. But his point is to say, I got 2 Bitcoin, and I'm going to grow from 2 Bitcoin in 1 year to have 10 Bitcoin. My strategy is a little bit different, because at this point, when it comes to trading, I'm not trading to build my crypto portfolio. I'm trading for profit to pull out. My goal, you just have $10,000 in there. I could pull out $6,000 a month profit and not touch my 10,000. So in essence, with that strategy, I'm not building my Bitcoin stockpile. I'm pulling the 6,000 profit out and using it to do other things. You see the difference? I'm not going from 10,000 to 16,000 in trade with, and then going from 16,000, and I might make off of that, if I'm trading off of 16,000, I might make 12,000 or whatever, 11,000, 10,000, and then keep adding that up. That is not my short-term strategy. That is the next thing I will do after I achieve a certain goal. That's why I always say, you know, what is your rule number 4? Where do you see yourself 3 months, 6 months, a year from now? What are your goals? So before I get into that long-term goal, I want to establish from this side an income source coming in off of my own money that's steady. And if I lose, then I just don't sell. I just work with what I have and build back up to that 10K and keep it at that 10K. Just like, I'll give you another example. We go back, we look at the on Poloniex, there is a bot. I don't know who's running this bot. I don't know if it's Poloniex themselves. There it is right now. 35 Bitcoin buy order, and then you got a 35 Bitcoin sell order. That's the same group. It used to be 50 Bitcoin. And before that, I saw it was at 75 Bitcoin. And it never goes higher or lower until they make adjustments. And from this strategy, it looks like they're just pulling the profit out. So once I reach a certain goal that I want in my head, where I want my profits to be, then I will flip that and say, okay, now let me increase that 10K to 20K. And I'll take 50% of the profit out for me. The other 50% I will use to build my crypto portfolio, or 10%. And just keep adding and stacking coins and stacking coins and stacking coins that I have no desire to ever pull out. That's an individual strategy. You have to come up with your own. There is no real right way or wrong way. It depends on what results are you looking to gain. That's all. Shane, what says that? Yeah, green will help us with the stream of income. Yeah, see, when you get your profits from green, then you can decide what to do. It can speed things up a bit. You know, since I'm still testing myself out, I wanted to grow from 200 to 10K in my exchange without pulling any of that money out to 10K. I doubled it since December. Remember, I started with 220 something. I'm at 460 now, and I'm not trading every day. Now, here's where I did lose. The market, let's go back 4 days, maybe just 2 days. Here's where I lost. Go 30 minutes. I made a profit. I'm not signed in, so I can't show you this, but I made a profit. Right? I made 8% profit. I bought back in when I sold, because I sold high. I bought back in at 39.80, right around here. But it was before this was all taking place. The market had come down quite a bit, maybe 4 or 5% or so. So I bought in on the low, and I put my sell order in at 40.80. So I bought in at 39.80 and my sell order was in at 40.80. Here's what happened. The market was trending above this top line. It was squeezing. It looked like it was going to go up. You see this little fake out right here, this little green up? It looked like it was about to come back up again, back into the 4,000 region. And the reverse happened. Just like that. Normally you see it below this middle line and it dropped, but it didn't. It started high and then boom, boom, boom. See that? Double boom, while my money is still sitting in Bitcoin at this price. So if this was Forex, I just lost that value. And I have two choices. I continue to try to trade at this level to build myself back up to get back my losses, or I add more money to it. So even though I'm at this level, I have more money in the market at this level to trade with to get back up to that higher. Those are your choices. Crypto, I don't have to put any more money into it. I still own the same amount of Bitcoin here as I do here. I can sit back, wait for the market to come right back up. I still got the same amount of coins. That's not the case in Forex. You can sit there and wait for it to come back up, but you're not going to have the same value as you did before because you just lost half of it. Unless you're doing certain trades. Yes, does that make sense? I hope that I mean, I've traded both Forex and crypto, so I understand that. But we're now starting to see it squeeze again right here. Let me go to the 6-hour, 24-hour chart, 30 days. Yeah, we're seeing a squeeze again. The bottom one looks like it's going up just a bit. The top one looks like it's going up just a bit. The last 30 minutes, what about 24 hours? 2-hour chart, 2 days. Okay, what about 5-minute, 6-hour chart? Yeah, it looks like it's curving on the way back up. We've got 1, 2, 3, 4 candlesticks of the 5-minute chart in the green. Look at this. Change is up 1%. Look at the board now. The board right now is positive green right now. I don't think CoinMarketCap's reflecting that yet. So this is actively going on live right now. Let's see what CoinMarketCap is showing. A little bit, 0.84%, 2% for Ripple, Ethereum 0.9%. So the market is having an upward trend right now. We'll see how high that goes. So I can sit. If I were to sell my coins right now, I lose because I bought in at $39.80. That's $300 low. That's like 10 to 15%, if not more, 10%. So I need this to come back up. Or here's another strategy. I could go ahead and sell right now, take that loss, but then for the next few days, do micro trades of getting 0.2%, 0.5%, 1% on every trade and make up my loss, even though it's still down here in the lower regions. It's below 39.80. I can do that as well. I just don't like doing it. I don't have the time. I don't like looking at the charts all doggone day. That's just the difference. But it's a choice. You decide what to do. But I'm just saying, I'm looking at this. 4 candlesticks in the green going up based on 5 minutes. What's our 15-minute one is looking like? Yep, even in the last 15 minutes, 15, we're seeing this is coming up a bit. All right, let me go back to the article. So again, only a small percentage of traders extract profit. Crypto traders expect a tough year in faced a tough year in 2018. After riding the highs of 2017, the low points in the current bear market have been tough to navigate through. Okay, that's only partially true. If you're a long-term holder, it might have seemed tough to you. If you're a day trader on the crypto side, it doesn't matter what the price of Bitcoin is. What matters is the volatility. This is what matters. Not does it go way up or does it come way down. When you know how to trade, you can make money when the market goes up. You can make more money when the market's going down because it's always bouncing around. So trading, Cox said, trading, particularly that of a short-term nature, is a difficult practice that only a small percentage of players have ever managed to extract profits from. Well, I don't know. If you're educated, I mean, I flipped 30 into six figures, and I was the beginner. I just doubled my money from December to now. If I was trading with $10,000 in December, I'd have $20,000 today. I did that live in front of everybody. There's many of you on here right now that's, who was it? Was it Lorna that said that? I haven't had a loss yet. I don't remember if that was Lorna or someone else. But many of you have made money. What, a couple of weeks ago, we had Albert made $5,000 on a trade. It's simple when you start doing it. It's just the consistency part and figuring out certain patterns. So, difficult practice that only a small percentage of players have ever managed to extract profits from, regardless of the asset in question. He added, of course, we often hear the success stories in the media. However, the many losses that have been incurred by participants seeking to time the market have been swept under the carpet. And that's also, you don't want to do that. This is why I say take your profit, even if, remember that time I made a 2.4% profit because I had my sell order already lined up when I could have gotten a 10% profit if I rode it all the way up and tried to time it when it got to the top. You can do that, but 9 times out of 10 doing that, you're going to mess up somewhere along the way and just get it, because the market can literally lose billions in a matter of minutes while you went to the bathroom. Don't be take that 2-3% profit. Don't worry about, oh, I could have got 8%. Don't worry about that. I'm telling you, the magic number is 2%. $10,000. You're doing 2% a day. That's $200 a day. $6,000. You're now doubling what the average American makes on their job. Don't get greedy on this. You would rather have long-term, consistent 2% a day trades than every once in a while getting 8 to 10%, 15% because you caught the ride, the wave that might have happened once every 2 weeks. If you can catch it. Be conservative and consistent. When it comes to crypto, I'm very, very conservative. I am not risky at all. Me and Diana be talking about that all the time. She asked me a question, and I said, you know what I'm going to say here. She said, I don't want to hear, I'm not a licensed financial advisor. Tell me, what do you think? We're not being recorded. Don't give me the conservative. But that's just my nature in the crypto space because I've lost over $50,000 there. But I've made far more. I don't like losing $50,000. I'm just conservative. Plus, I know most people aren't educated in the space. So never deal with money you cannot afford to lose. And when I lost that money when I was doing Forex, I'm like, oh, heck no. I'll pay somebody to do that for me. Black Wednesday, George Soros bet against Britain. Huh? What does that have to do with anything? One high-profile success case involved billionaire currency trader George Soros, who made history when he bet against the pound sterling in 1992 and made $1 billion in one day. Freaking A, man. We got people out there that's trying to figure out how they're going to pay their rent because the government furlough, we can't call it a furlough, government shutdown. How they're going to buy groceries, pay their car notes, live in paycheck to paycheck. And this guy, because he had the resources, but more importantly, he had the knowledge and did a bet on the exchange and made $1 billion in one day. Yeah, a little bit of luck took place there, but what did George know that everybody else didn't? What's the difference between him and you? Knowledge and resources. Can you gain the same? Absolutely. It's just going to take you a little bit longer because you didn't start with the resources he had. You're not like Donald Trump. You didn't have $400 million handed to you to make something out of. You got to make something out of nothing. Don't wait till I write my book. Maybe when I hit 50, 8 years, I'm going to be 50 in 8 years. 8 years from now. And I'm going to talk about, I started with $30. Cox pointed out that Soros is one of the few. There are a number of lessons which can be found by analyzing the underlying causes of this crisis and how they led to such problems. Cox pointed out that Soros is one of the few exceptions who has had multiple successes trading against central banks over many decades. Also known as the man who broke the Bank of England, Mr. Soros stands out as having been involved in several lucrative currency trades that span decades. He is credited with playing a pivotal in the British pound crashing out of the European exchange rate mechanism, which basically pegged the pound to the Deutsche Mark. Cox commented, George Soros' strategy was simple, yet brilliant. Britain at the time was suffering from high inflation, and exchange rate versus the US dollar was under pressure due to trade with the US. Soros quickly realized that the Bank of England would not be able to maintain its peg, sold the pound short through a systematic series of trades. Following this strategy, he profited as the pound decreased in value, and some estimate that he made $1 billion in the process. Undoubtedly a simple and profitable application of sound knowledge in macroeconomic forces. Again, you guys remember what I showed you yesterday where the world's money is? He was using the derivatives and stuff, the futures. He was shorting it. It's a form of manipulation. And some of it should that be even legal? The rich know how to do it. In conclusion, while there are in certain areas extreme differences between the Bitcoin and Forex markets, there are also similarities and the potential for more convergence as digital assets cement themselves in the global financial system. As Soros himself observed, markets are constantly in a state of uncertainty and flux, and money is made by discounting the obvious and betting on the unexpected. Do you see how powerful what he's just said there? That last part? Money is made by discounting the obvious. You know why? By the time it's obvious to you, that means it's obvious to everybody, which means the opportunity has already passed you by. Because most people are Johnny-come-latelys. They're bandwagon jumpers. They already see the ride something and they want to hop on in it because they have fear of loss. They think that, I better get on this before I lose out. Everybody else is getting it. But he said, betting on the unexpected. That is where education comes in. Betting on the unexpected. Crypto right now is the unexpected. And these billionaires are already betting on it. I'll show you an example. Here's what I mean. All this talk about crypto, and you look at the world's money markets in visualization. This is crypto in the world, right here. All the money being made, this is crypto. This is the global money supply. This is the global debt. This is real estate. This is the derivative. This is how Soros made $1 billion in one day. You see how big this is? Crypto is but a blip on the radar screen. Just one box. That's crypto right here. Look at this. Betting on the unexpected. This crypto is the unexpected. All it needs is a percentage of this. That's it. What if it had 5% of this? How big is this market right here? Low end, 544 trillion. High end, 1.2 quadrillion. If Bitcoin got 5% of that, heck, even 1% of that, we're talking anywhere between 20 trillion to 100 trillion dollars. Are you? And we are right now, right here. There is room for every one of you. Let's put it this way. That's silver, right? Silver, 17 billion. The entire network marketing world, those of you that come from direct selling, you know, the Amways, the ACN, the Jeunesse, TLC, whatever product you've been selling, the coffee companies, Organo Gold and whatnot. Holton Bud's making $1 million a month selling coffee. He even said, I only need 1% of the market. Guess what? All network marketing companies. Dexter Yeager that passed away had $100 million in his career. All of that was split in a $40 billion market. That's all network marketing companies are playing in a $40 billion market. And look at how many lives have been changed from direct selling companies. How many people have walked off their jobs? I did because of network marketing. I retired at 36. I haven't had a job since because of network marketing in a $40 billion market. Crypto right now is just 123 billion. It's still more than double, almost triple. It is triple what the network marketing market is. And then you look on the global scheme of things, where the real money is, it's not even on the radar screen, yet they're all paying attention to it. All the billionaires, they're all paying attention to it because that is where the new river of money is going to be flowing. All this money is going to change direction. And it's going to go from here, the stock market. Think, this is the stock market. This is crypto, one box. Just percentage of that is going to start flowing here. This chart is going to get bigger. These companies alone are still bigger than the whole crypto market, just as a company. And every single one of these companies, Amazon, Facebook, Apple, Alphabet, Microsoft, Berkshire, is bigger than crypto, and they're all investing in blockchain technology and getting in on crypto. I'm just saying. When I wake up in the morning, this is my mission. And I look at other people, especially when people call me, complaining about different things. And I'm looking at them like, I don't say anything. I just listen. This thing is so much bigger than what you're concerned about right now. I don't have time for any of it. All of my focus right now is how can I build a financial wall around my family so high that nothing can penetrate it, and we have a short span of time to do it in. I'm only focusing on the things I can control. All I'm saying. All right, guys, I hope you learned something new. As always, at this point, this is Friday night, which means there will not be a late night crypto talk unless something major happens. I'll be with my family tonight. Also, there is not, I'm thinking about this, there is not going to be, I need to talk with Diana and Jared, but I don't think we're going to be doing a training tomorrow. So you can use the replay of our Saturday training we did last week, and we will continue it again the following week. So I don't think we're going to be any training tomorrow, but we'll put an email out about that. So anyways, I hope you guys learned something new. As always, that is the point. My head is exploding right now. And I am itching to get things done. Well, thank you guys. Have a great day. See you all next time. God bless. Bye-bye.